Okay, we're back. You can go ahead and start whenever you're ready.
Let's go.
You're still in the audio, by the way. You got to leave the audio. Yeah, there you go. All right, we are back. Zach, take it over.
Alrighty. We are back, everyone. So sorry for the technical difficulties that we've been experiencing and for the inconvenience or delays that may have caused you. We are happy, success, as Mick has said in the chat. It's finally here. We're back, and I'm just going to pass right back over to Rob because we got lots of exciting stuff to get into.
Thanks, Zach. Take 16. We're getting there.
Right.
Let's just go over the markets real quick because I do want to get to our special guest. Creating up the excitement and anticipation for that. So it's all part of the plan. Not really. But taking a look at the S&P, we're getting a little bit of an oversold bounce yesterday and today to start the week. We do have big inflation reports at the end of the week, which are really going to determine where we go from here in the short term today. Closing above 500 would be key. We're about to close above the 10-day moving average, but you can see that on the high of the day, we've hit the 50-day moving average. That's the royal blue line. It would carry more weight, obviously closing above that 50-day moving average. So I think you just take these 2 days with a grain of salt and wait and see what the inflation reports show at the end of the week. We have the PCE report on Friday, another inflation report on Thursday. So the next couple of days, maybe the bounce continues. Maybe we just churn sideways. We'll have to wait and see how the market wants to handle that. I can't imagine any sort of a big move higher with the potential for a hot PCE report. So take it for what it is. We got a little bit below the 10-day moving average on the low on Friday. So we've recovered that. We're back to the 10-day moving average. You've heard me say this numerous times if you've been watching before. No security in any time frame gets very far away from the 10-day moving average, especially on the SPY, just traveling along that line. So let's just take a look at a couple of the other markets real quick, and then we'll bring in Brandon, and we'll talk all things crypto following the halving that occurred Friday night. So here's the Dow, the DIA. You can see that we had the big run up prior to the end of the year. We've talked about that and then leveled off. We didn't have the same elevation on the move up in the Dow as we did on the SPY because I think the rotation had already occurred. We came down. We hit support here at 380. We're right at the 38.2% fib level. Perfect opportunity for a bounce. Same thing here, above the 10-day moving average, but not above the 50-day moving average yet. The key here is we need to hold 380 on the Dow. If not, then you see the arrow down because the next level of support is down in the area of 350. That's where we would likely be going if we don't hold here. So we'll look at the Qs and the IWM, and we'll skip the rest of the stuff and get to the crypto world. So on the Qs, we had this wave 5 that moved right into the tap box exactly as planned here. This is the new beta version of the software from Hub. If you haven't gotten it, go to hub.com, get a copy of it. There's nothing to load onto your computer, nothing to download. It's all browser-based, and we will have live cryptos here coming soon. So that's going to be exciting, probably within a week. So when we look at the Qs, came down here. We held the top of the wave 3. We held this area right here around the 410 area, which got us a little oversold here. We haven't even made it back to the 10-day moving average yet on the Qs, which is kind of interesting. And then if we look at the IWM, we thought we would be heading back down towards that level of 190, and we did. And on the close Friday, and then bounce back up. We're above the 10-day moving average on the IWM. So if you're looking for some sort of a positive thing, small caps, you've heard me say this before as well, are a good determining factor by a lot of people of risk on, risk off in the market. So people are willing to take a little bit of risk yesterday and today, but we're not near the 50-day moving average yet. So we went up to 210. We came down to 190. We're still in that big range between 210 and 190. the high of the wave 5 right smack in the middle of the tap box. That's why we talk about Elliott wave. Markets move in impulses and corrections. They don't go in a straight line for very long. And that's exactly what Elliott wave is designed to do, is to try and label those impulses and corrections and figure out which ones are meaningful, like labeling a 2 or a 4, or the correction from a 5 back to a 4. Those are the corrections that you consider. And when you're looking at these little ones in between, that's where the zigzags come in, and we look for moves within the waves. But I don't want to take up any more time on the markets. I'm going to switch my screen over and just show the chart of Bitcoin real quick, but we'll bring Brandon in, and I'm sure he's going to have some really cool charts to show you. So I've been touting this as our
crypto expert
to determine how deep is their knowledge. What's the depth of their knowledge, he tried to say. And so without further ado, I'd like to bring in Brandon Burton so we can talk about all things cryptos. And perfect time to have you, Brandon. Sorry about the technical delays. I know you've been sitting there patiently waiting, but with the post-halving, very curious to hear your comments. We've obviously had a little bit of a bounce in the Bitcoin world. So take it away, Brandon. What do you see?
Man, Rob, it is great to be on, but I do have some information for you too that I think might go hand in hand with what you see on the daily. So this and maybe we'll talk about this a little bit later, but I did happen to buy some stock for the very first time in a long time on Friday, and it relates to crypto, and I'm going to tell you why I did that and what that means maybe going forward for for the specific stocks that I did happen to purchase. But Bitcoin, I think we discussed Friday, with the Bitcoin halving was going to have a big impact on kind of what's going on in the markets going forward. We talked about the past 3 halvings, this halving, and kind of the cycles of each of those halvings and what that does for Bitcoin's price going into this next epoch. We're actually in the 5th epoch of Bitcoin, and this is programmatically programmed so that every single halving, the amount of Bitcoin flooding into the market is reduced in half. So instead of 6.25, now we're getting 3.125 every single block of Bitcoin, meaning 450 Bitcoin is getting put into the market every single day. Now, what this basically ultimately means is scarcity. And especially with the ETFs buying, we're running into that thing where we have no Bitcoin left on exchanges to buy. We have no Bitcoin because all the people that have purchased Bitcoin know they're going to keep holding until $1 million per Bitcoin. Just like Kathy Ark said, Bitcoin's going to get to $1 million per coin. So nobody's selling Bitcoin. So we're going to see the price start to escalate here. And I talked to you a little bit about this Friday, but I believe we're going to be in this kind of stagnating pattern over the next couple of weeks where we kind of capitulate and kind of move back and forth in this tight range. But after that, we're going to see a parabolic move upward. But I didn't want to talk about Bitcoin as much today as I do some of the altcoins. And if you look at my screen here, this is one of the charts that I like to look at, Rob. This screen kind of shows us every crypto in relation to Bitcoin. So for example, on screen here, you see ETH is down compared to Bitcoin. So our main goal as digital investors that we teach our audience and our groups over at Digital Investor is we try to beat Bitcoin, do better than Bitcoin with the other trades that we put on or the other things that we invest in, because I believe in any of the historic crypto markets, we've had a chance to 3, 4, 5, 10x against Bitcoin as long as we put ourselves in the right position. Now, this chart kind of shows you what's going up compared to Bitcoin and what's going down compared to Bitcoin. Today, you can see obviously Solana's up against Bitcoin. Some of the meme coins, we got Pepe, Floki, a couple of, this is WIF. This is actually, we'll talk about this in a second. But a lot of things are losing against Bitcoin, and there's a reason for that as well, Rob. Bitcoin has all the buy pressure and all the eyeballs on it right now with the halving and with the ETFs. But there's going to come a point when that actually switches over. Okay, that's going to switch over, and other horses, which is do you ever go to the track or anything? Anyway, other horses are going to take the reins and they're going to pass Bitcoin up, and not just pass Bitcoin, but they're going to exponentially, parabolically pass Bitcoin. So we need to find the right time to move our assets from Bitcoin over into these other alt plays. And one of the ones that we're looking at right now, the main one, is obviously Ethereum. That's the easiest play. And this, I would love to get you on the Hub software and take a look at this chart. This is the ETH Bitcoin chart. And as you can kind of tell from this chart, it is in a downward trend, meaning Ethereum has been losing to Bitcoin over the last 6 months, basically. So had you purchased Bitcoin and Ethereum, if you purchase both of those, your Ethereum bag would be a lot lower than your Bitcoin bag. So what we are looking at right now is we think there's going to be a slight switch in this. As more and more people stop putting all the right pressure on Bitcoin, they're going to look for their number two, which is Ethereum, typically in the past. So we see Ethereum as the easy trade, and this might be a turning point. So I would love to get your chart read on this sometime, Rob, because I think that'd be really cool to see. But I did mention a couple of stocks that I did purchase on Friday. So I want you to look at that in the Hub software actually right now before I kind of go to my next little topic that I want to discuss with you. But at the Bitcoin halving, everybody was worried that the miners were going to suffer huge, right? So the miners make all their money through the Bitcoin subsidy, which before the halving was 900 Bitcoin per day. After the halving, 450 Bitcoin a day. So everybody was worried that their equipment would be rendered useless and they wouldn't make as much money on each of those blocks. But we knew in our little Bitcoin world that Casey Rodemer was putting a new protocol on top of Bitcoin called runes. And those runes being built on top of Bitcoin was basically kind of like a layer 2 / new type of BRC20 token that was going to cause some kind of hysteria. And as it turns out, we were right. We knew as soon as he launched this at the halving, everybody would rush to buy these runes. And in that rush to buy these runes, that first block after the halving actually generated almost 39 Bitcoin in fees. So instead of the regular 6.25 for miners got 39 Bitcoin for that first block. So what stocks did I buy? I went and I picked up some Clean Spark on Friday, right? Because I'm like, well, I have a theory that they're going to make actually a lot more than they think they're going to make. So I don't know, Rob, if you want to pull up that chart of Clean Spark there and take a look at that, tell me what you see. But we believe on the inside, miners are going to do a lot better going forward, just based on kind of what we know on the Bitcoin side of things, because I think they're going to actually make more in transactional fees than they had anticipated. And I think we're starting to see that right now in the market. Have you ever looked at Mara or Clean Spark or anything like that?
I have looked at both of those in the past, and we get questions about those as well. I have Ethereum up, so I'm going to use that one, and then I'll switch over to your stocks. But a couple of things that you mentioned that I think are really key here. In my world, the equities world, and at Elliott Wave Options, we trade derivatives on stocks, which are options. We use the SPY, right? The S&P is the benchmark, and then everybody's job is to try to beat the S&P, right? Otherwise, you could just be in a mutual fund on the SPY, and then that's it. So the goal is there. So what I learned from you, not to put words in your mouth, but to make sure I understood you correctly, is your benchmark is Bitcoin, and then you try to outperform Bitcoin with these other coins. That's right, correct?
Yep, that's right. Exactly.
Okay.
Exactly.
Okay. Yeah, so that's really interesting, and that makes an awful lot of sense. And that's why we have you on, because normally you hear Bitcoin is the king, and people talk about that, but using that as the benchmark to beat, I think, makes an awful lot of sense. So the chart here on Ethereum, we showed it on the chart that you had up as well. A big triangle here. Talk about triangles a lot. It's a descending triangle, which does not mean that it's going to break to the downside. Any triangle can break to the upside. And it sounds like this may be ripe for an upside breakout. And you can see the target is up here around 4,800 would be the first target. So it's hard to imagine with everything going on, Ethereum breaking to the downside. You do have to respect moves either way. But when you measure the triangle here from 28 to 4,000, that's a 1,200 point move. And if we look for the move from the point of the wedge to 1,200 points, that brings us up to getting in this area from the 48 to 5,200 levels. So that's what I see on the chart. Let me switch over to the live platform, and we'll bring up the stocks that you talked about. CleanSpark, I believe, if I'm correct here, is is it CLSK? Is that the symbol for?
You're asking me what stock symbols are. That's funny.
I think that's it.
I just go in and and it's funny, and I've joked with you about this in the past. I'm like, my wife tells me I need to diversify out of crypto into stocks, so I said fine. So I went and bought Bitcoin miners. So it's like my diversification.
You switched over. But the other thing that I heard, which again goes against everything that I've been hearing, is that the miners were going to suffer. And you just explained why they're not. And you've been right. Look at this move to the upside here. And I had the symbol right, by the way, just for clarification. So you can see this move here. We came right off a support level. And so just from a technical standpoint, you would expect it to hold right in here. The wave 4 came down exactly to 50%. So we had a 50% correction. I think a lot of people thought we're going to come down and fill this gap, et cetera, because I was hearing, and the comments that were made on the YouTube video over the weekend, the U.S. market update that we do at Elliott Options, a lot of people were saying, oh, the miners are going to get killed, et cetera. But you've been right. We have a positive cross of the 10-day crossing above the 30. So from a technical standpoint, it looks like you're spot on. If anything, we're a tiny bit overbought. But that's just a short-term phenomenon. And if we can get above this level here, right at was that 20, right at the 20 level, then we're off to the races here on CleanSpark. So I think, that's why we have you on, Brandon, because you've been right. And you've been right ever since we first started talking about this, how many months ago when we were talking cryptos. Marathon, you mentioned Mara. So we'll look there, and the charts are extremely similar here, where you came down and a little bit further correction on Mara than we had on CleanSpark, but this support level right here looked like we were going to break it, and again, a breakdown that would have brought us all the way down here towards the 10 level. If we didn't hold right in here, there was a little bit of support right in this 15 level, and that's where the wave 4 labeled, and then we're back moving higher, also above the 10-day moving average. We don't have the 1030 cross yet. So for those that are interested in your theories of the miners are going to do better than people thought, here's one that is a little bit behind where CleanSpark is, but you've got almost a free move up here as far as resistance is what I mean by that. We're above this first resistance level, and if I put the crosshairs on, we'll be able to see that level was at 1790. So we've gotten above that. So there's no more resistance there. There isn't any more resistance now until we get to 25. So my expectation would be that this move continues up to 25. And then we go back to what we were talking about with CleanSpark. We get above 25, then we're off to the races here as well. So, wow, that was a great analysis already on why the miners haven't been getting crushed post-halving, and to the contrary, they're rallying rather nicely. So I think your quote diversification is working really well.
quote unquote. Don't tell my wife, but I think it's cool to see your chart breakdown just align perfectly what's actually happening in the real world. But there's reasoning behind it, and we don't look at charts as much as we look at fundamentals, what's actually happening within the companies. And a lot of people think crypto's crypto. There's actually a lot of teams behind a lot of the crypto that we invest in and we put our assets into, and then we diversify into. There's a lot of teams, and there's a lot of real world crypto dollars being made and generated through those things. So these miners, specifically, CleanSpark, for example, they're one of the leanest running machines there is as far as miners. They've done everything to make sure they have the best economical advantage in mining, because as mining costs go up exponentially, they either need two things to happen. They either need to make more per block, or they need the price of Bitcoin to go up. And if both things happen, then they went on an exponential level. And where the fees have stayed so high, even we're 500, let's see what we are. We are, gosh dang it, we are 551 blocks into the new epoch after the halving. 551 blocks in, and fees are still extremely high. They're making more per block now with all of the fees and the transactions through the Room protocol and some other things than they were making before the halving, and nobody kind of saw this coming. So now you can see that in the stock price. You can see the result of that, and people are starting to think, oh crap, okay, so this is happening. And the people in the know can see this happening, but most of Wall Street is not going to see this until they see the Q2 results come through on CleanSpark and Mara. They're going to be like, whoa, how did they make all this money when we thought they were going to make less money? So if you're actually paying attention to the pulse of what these companies are actually doing and how they're getting their revenue, then I was like a no-brainer to me, like, well, I can see before anybody else, I can see block for block data on the blockchain, how much they're making and how much each miner is making because of the way the blockchain's set up. It's so clear and transparent. So it's perfect for us to see. So very cool to see your analysis of that as well.
Well, clear and transparent for you, but not for us mortal people here. But everything you said has been spot on, and you were 180 degrees different than what the prevailing wisdom was, that they were going to get hurt. And you've been right. A couple questions. I did show that the chart of Mara is lagging CleanSpark just a little bit. So there could be a catch-up trade from the equities, or would your viewpoint be CleanSpark is better, stay there? Or do you like the diversification of having both? And then one other question, not to ask too many questions at once, though, but you're talking about Ethereum, Solana, some of the other ones that you had on your screen are ways that you're looking to outperform Bitcoin. Would those be better things to do, or do you want a combination of those coins in addition to dabbling in the miners as well? So should they balance that out, or what are your thoughts there?
I mean, you ask a great question, and pulling out of crypto for me is like pulling teeth, and it's not going to happen very easily, only because right now we're on the precipice of probably the biggest bull run in crypto and possibly one of the last big bull runs that we're going to ever have. There's just so much buy pressure, and so I am not going to, I mean, if we're talking diversification over to stocks versus crypto, we're talking 1% to 99% right now. So just flat out. And so then you ask the second question of where we're headed right here. And that's only because I bet on the fastest horse theory. And if we're looking at stocks versus crypto right now, as we're entering this next bull run and going up for the next 400 days in Bitcoin, like I think is going to happen, barring any type of black swan event, then we're going to stay in crypto. And not only that, we're going to diversify into different crypto assets that's going to give us the best possible chance to outpace Bitcoin, but we still hold Bitcoin because Bitcoin's our safety asset, right? That's basically the deep crypto maximalist safety asset. That's their stable coin, right? That's their US dollar. You say, oh, I have 20% cash. That's 20% Bitcoin, right? That's what we believe. So we hold Bitcoin as our stable coin asset, and then we diversify outward from there to try to beat our benchmark of Bitcoin. And so we do that through things called, just like you mentioned, like altcoins, like Solana, Ethereum, and a bunch of other ones, okay? And I think that we talked a little bit about one over here, and if you take a look at my screen here, we talked a little bit about one called Jupiter. Now, let me explain what Jupiter is, okay? For those of you who don't know, or you guys are just kind of learning really quickly about crypto the first time, I kind of want to walk through what crypto is and then why Jupiter I think is possibly a good thing to get into if you're looking for a possible option for an altcoin, okay? This is, oh wait, that's the meme pool, that's the Bitcoin. That's what I was talking about. You can see each block here. We're 551 blocks in, and when you see red like this, that means fees are exponentially high. And I think there was a comment here on the chat about fees needing to be low on Bitcoin. That's not entirely the purpose of Bitcoin. That's why we have layer 2s and we have all kinds of other things for those transactional purposes. Bitcoin is not meant for transactional things like making payments. You're not going to go to your grocery store and make a payment in Bitcoin. you're going to use another layer or another coin for that purpose. Just like, in the stock market. Anyway, we can go through that a different day, but there's a whole reason for that. But I just wanted to answer that question really quickly. But if we go through here, I made this little graph for us so we can kind of see and visualize what's happening and why Jupiter might be a good trade. For most people, they kind of know they have most of their assets at a bank, okay? And to kind of relate this to the stock market or putting money in the stock market, you have to have a thing called like an on-ramp. If you want to buy stocks, you send your money over to, let's say, E-Trade, okay? In crypto, the first on-ramp that you'll have, and one of the bigger ones, obviously, is Coinbase. So you send your money over to Coinbase. From Coinbase, you can diversify into different assets like Bitcoin. You can buy some Ethereum. You can buy some Solana, okay? And Coinbase is like a custodied place for you to hold your crypto assets. It's the simplest way to get your initial dip your toes into crypto and start experiencing the crypto madness by buying kind of the whatever Coinbase has decided to list on their exchange. Okay. And it's just like if you were to go put your money over into E-Trade, you can buy any of the stocks that E-Trade has available. You can buy any of that stuff. But the problem with that is, number one, Coinbase essentially owns your assets, worst came to worst, kinda. I mean, at the end of the day, and they control those pools of assets, and they're yours. But if you want to go the full decentralized way of doing crypto, then you have to get what they call is a decentralized wallet. Each blockchain actually has its own decentralized wallet. So Solana, for example, has a different one than Ethereum. Ethereum, we use MetaMask up here, and you'll see all these extensions like up here in my thing up here. Bitcoin, we use Xverse wallet, which is as a decentralized wallet to hold all of your Bitcoin in. But the one that we use for Solana is a wallet called Phantom, okay? And this Phantom wallet, you can put all of your Solana in here. And you can hold it off chain, you can hold it off Coinbase, and you can have it in your Phantom wallet. And then you can do all the decentralized stuff that Solana was meant to do. Meaning, you can buy all the meme coins, you can buy Solana NFTs, you can do staking, you can do all kinds of stuff from within this Phantom wallet, none of which can you do in Coinbase, okay? And this is what I'm getting to. The reason that you have this in the Phantom wallet is that it's just a wallet. It's a tool that you use to hold your stuff. But if you want to make a trade from Phantom, you don't have the ease of use of Coinbase where they have all these things listed. So you have to go use a decentralized exchange, okay? Which that's where we get to Jupiter. This is Jupiter right here. This is their cool logo, and I'm going to write it out right here. Jupiter, not the planet. So this is where you use Jupiter, okay? And Jupiter actually looks like this. You can go through here. Oh, let me take all that junk off the screen. You can go through here, and you can actually make swaps in Jupiter. So let's say you wanted to change out your Solana USDC, and you wanted to buy Solana. You just enter in how much you want, or let's just say you want to do Solana, and let's say that you actually wanted to buy some Jupiter. So you put in, you want to trade 2 Solana, and you buy some Jupiter. Bam. And then you hit swap. And this is a totally decentralized way of making swaps. But the reason that I believe that Jupiter right here could be a possible good trade is because they are currently the number one leading place to do decentralized swaps on Solana blockchain. And with that, Jupiter is currently doing almost $1 billion a day in these swaps, and they're making 0.2% takers fee on each 0.02% takers fee on each one of these swaps, generating a lot of revenue. And as a Jupiter token holder, you have the opportunity to vote and kind of participate in all of their governance, their staking, and anything else, meaning if they decide to list a new coin on their exchange, you potentially get that new coin airdrop, and I know airdrop's a weird term, given to you for free just because you hold the Jupiter tokens. So it's a way to exponentialize your token ownership by holding another token. You get more new tokens, and that's very commonplace in crypto, but that doesn't happen. It's like if you were to own Tesla stock, it's like, well, Tesla partners with a new company called, let's say, NVIDIA, right? And when they do that partnership, NVIDIA decides to allocate X amount of shares to Tesla holders, and then they just give free shares to Tesla holders. That doesn't happen very much in the Web 2 world, but in the Web 3 world, new companies partner all the time and do that type of thing. So as they partner with these new companies, they get these free allocations of the new Web3 tokens that are going to be launched, or Web3 protocols. So just as a Jupiter holder, along with the appreciation of the asset itself, you're going to get these allocations given to you just by holding the Jupiter token. So I think that's actually really cool. Also on Jupiter, then you obviously have the ability to go and swap into these other coins from your Phantom wallet, so you can buy any other coin through Jupiter. But Jupiter is a pivotal tool, and it's necessary to be able to swap in any of these tokens. So that's what we're about, is we find those tools that are so necessary that without them, people would struggle to be able to get into the things they want. So you find those tools that are necessary, and we invest in those assets. To us, it's like buying the railways back when railroads were first invented. You don't need to buy the oil. You don't need to buy all the lumber. You don't need to buy everything else that's getting transported on the railways. But if you own the railways, you get a percentage of all of that stuff. So Jupiter is that railway that helps do all the transactions on the Solana network. So I think that's actually a really cool thing. I think we talked about Jupiter on Friday, right, Rob, with you? Did you nabbed a little bit of that, or have you had a chance to dabble in that?
Yeah, based on our conversation Friday, and it was perfect timing, actually. And I think your railway analogy is really spot on. So, and that's a great, far more in depth than what we talked about on Friday on the Hub Financial Show. That was I understand it more now. Before it was just okay, buy Jupiter. So based on your now I understand.
You bring
why.
up something.
Understand the roadmap. So that was great.
You bring up something super funny, because we've learned this with a lot of the people that we inform and we teach. A lot of people invest first, do your own research later type of thing. Just like we'll buy now and then we'll research later. So that's okay. We try to help people do both at the same time. But that's our goal. That's our goal.
It's the faith that I have in you, Brandon. I've told everybody numerous times. I can read charts. I'm an expert on Elliott wave triangles. I know where my zone is, or my lane. But when it gets to things that are outside my lane, what we're trying to do here is create education information for people. So if there's something that's not in my lane, I want to go find who's the best in that lane. And I think you've done a great job of explaining why you're on today, because you know your stuff. That was an awesome explanation, and I learned every time I talk to you. I learned something, and so I hope everybody else felt like they did as well. So before we let you go, we got a late start, we're running out, but remind everybody how they can get in touch with what you do, where they can find you, etc.
Hey, thanks for bringing that. Yeah, we do digital investor. We do Monday, Wednesday, Friday. We do live streams, but we also have an entire dashboard for our members with all kinds of crypto tools, assets, ways to learn, and then we do an allocated crypto portfolio where we do kind of a simulated portfolio where we go through and we pick the assets that we're investing in. But this is over on our website, powertraded.com/Bitcoin for all of you guys. And this is, I honestly feel like we give some of the best education around. We have an excellent team where we know what we're doing. We use crypto every day, and we're in the kind of, like you said, we're in the trenches of it, so we know what we're talking about. But we'd love to see anybody over there that wants to learn more about crypto and about some of these questions that I'm seeing here in the chat. So.
Yeah, and the timing is perfect, right? Post-halving, stuff is moving again. I mean, we went through the whole, what they call it, the crypto winter. Is that what they called it when it wasn't moving? And it's back in vogue and moving again. So whether you want to participate, you've given them all kinds of information, whether they want to get in crypto specifically or the mining stocks that do have options. Perfect opportunities for everyone to participate in this and try to beat the S&P and Bitcoin itself. So thanks a lot for coming on, Brandon. Did you have anything else? I don't want to cut you off if you had anything else to share, but
I just want to hit a couple of these questions really quickly because I think it's important.
Do it. Yeah.
Just because you're decentralized. Yeah, just because you're decentralized doesn't mean you can hide from taxes. All of this stuff is 100% transparent and on the blockchain. If you do something in your wallet, I can see it. The blockchain is an open set of bank accounts, and literally, like, anybody knows how to read them who's looking for the stuff. And so I can assure you, there's nothing decentralized or nothing hiding or flying under the radar as far as that goes. And then, how do you know Jupiter is not like FTX? So Jupiter is a decentralized exchange that does not custody assets, meaning they do not hold any of your crypto. When you make a swap on there, it goes into a liquidity pool and it pulls it back out. It's instant, okay? FTX is more like Coinbase, where they hold pools of assets. It's more like a bank account, which that's what we're trying to get away from. And the whole reason for all the reason we believe in crypto, or more like E-Trade, where they actually hold your money hostage. And if E-Trade goes down, or if your bank goes down, and this is the whole reason Satoshi Nakamoto, they created Bitcoin, they didn't want anybody to hold your assets, just like FTX. FTX was holding their assets, and they did a lot of double, triple leverage, quadruple leverage, very similar to what banks do. Don't get me started. Very similar to what banks do, and they went down. So same type of thing. But Jupiter, for example, totally different than an online exchange that holds your assets. It's basically a swap mechanism, and you're using that swap tool, and everything else is from your decentralized wallet. So very good question. Anyway, so hopefully I get that out of the way.
Yeah, well, I'm totally with you. We've been talking at LA Wave Options about doing a conspiracy theory show special one time. And one of the things that I don't think people realize is how banks leverage your money. For every dollar that comes in, they lend it out 33 times. So that's extreme leverage in the bank. So you're spot on there. And people think, oh, well, it's insured. FDIC and the deposits are insured, but that's two things there. And you got me going. You said, don't get you started.
You're speaking my language, Rob.
Yeah. Well, the two things are, one, the FDIC only protects 100,000. So if you got more money in that, it's not protected. And the other thing is the FDIC is not the government, even though people think it is, Federal Depository Insurance Corporation. It's an insurance company, and insurance companies go under as well. So if the insurance company goes out under, none of your money or whatever they can scrape together, what percentage on the dollar you might get back if the insurance company fails. So there's a misnomer that money is safe in banks. And so that's one of the reasons that I'm interested in this. Diversifying away from all this makes a whole lot of sense. And you've explained why. And I like your comparison to FTX, because we just saw what happened there when they're holding the assets. It does seem like the depositors there got a little bit of a break because the run up in Bitcoin is going to allow them to get a lot of their money back, but it could have been a complete and utter disaster. So, going away from someone that holds your assets makes an awful lot of sense from a lot of things. So, gosh, we did get off on the tangent there, but any other questions that you wanted to refer to? Any other comments before we wrap things up?
Oh my gosh. When you start to learn more and more about Bitcoin, you'll start to understand its necessity in the world that we're living in today to fight inflation, to fight things like banks doing the 33x leverage on your money, by the way. Anyway, so we can get through all that, but Bitcoin is a finite, limited supply asset at 21 million. There will never be more than 21 million Bitcoin, ever. Like, it's finite. You can't go print more. You can't go change the blockchain. You can't go change the code. And so it is the perfect hedge against inflation, and people will start to slowly realize that. And so hopefully we can start to ingrain that in people's heads and start to teach them why that's important and why that, it's just necessary in today's financial system. So.
Absolutely. And, you're talking about a limited amount, and, we used to be on the gold standard, right? And got out of that back in the 70s. And it used to be that the government could lend out $35 for every ounce of gold in Fort Knox, and then we wipe out the gold standard, and now you've seen what's happened, right? The government is just spending money like crazy. So anyway, all kinds of things that we could branch out and get off on these tangents. But thanks for handling the questions. That was important. We do the Q&A at the end, and having you handle those was fantastic. Thanks so much for being on. For all of you that are used to are posting an idea, what we're going to do for the idea for this, and it's actually going to be a post since it doesn't follow all the rules, but goodness, looking at that chart of Clean Spark, it sure follows a lot of the Elliott wave rules. That's going to be our idea. I went ahead and branched out to see where the wave 5 would show, and somewhere between 30 and 35 is the first stop there, based on the Elliott wave pattern for Clean Spark. So Clean Spark moving up to 35 is going to be our. We'll do this one as a post, Zach. So you and I can do that afterwards. So everyone can go to, if you've got the Hub software, you can go to the ideas area. You'll see that one. But since we're at time, we'll go ahead and do that once we wrap this show up. But it will show up there as a post. So again, the case study consideration for this week will go with Clean Spark. Note that it's a tiny bit overbought at the moment, but any sort of a short pullback is even a better opportunity. But it looks like we're going to up into that 30 range. So thanks again, Brandon. Love having you on. I hope everybody enjoyed it. I learned something, and I hope we can do this again in the not too distant future. So thanks again. Enjoy the rest of the day. Really appreciate you taking time out of your trading day as well to be here. And for everyone else, again, apologies for the technical difficulties in the beginning, but we appreciate you being here as well and taking part out of your day. So we're going to get back to trading. Enjoy the rest of your days. Thanks again, Brandon. Wonderful information.
Thanks,
and look forward to it again soon. All right. Take care, everybody.